Let's go to the question of the larger European issue, not just banks. I'll put a chart up here that basically shows the blue lines are showing GDP growth rates coming down, not to zero, but coming down substantially. And the white is the European economic sentiment. And I guess the basic question, and this is something that the Commerzbank CFO addressed, is does this keep going down? Does it go into recession? Or is it just sort of a slow fever?
If you really press me, I do see the European Union going into recession over the next 12 months. I guess the issue is that there's a lack of dynamism there. I mean, on the upside, in the best of days, the growth was not all that great. I don't think it would be a deep recession. I mean, they're just the amplitude of the waves to the up and the downside are both sort of muted. I do agree that a significant valuation discount on European shares, not just the banks, but Europe overall, is justified. The issue is, I don't think it's going to get much wider. I mean, Europe was almost at parity with us 10, 12 years ago. Now it's gone to a 35% discount. I don't think we're going to see that type of revaluation again downward from here.
How do you make so how do you know when it's a value trap and when there's actual value? What's going to be the signal for you?
For us, we do look at some trend action, and I guess we have an allocation model that has failed to signal. I mean, I thought it might when the U.S. fell out of bed in December, and quite frankly, Europe and most global shares held up better on a relative basis. But we haven't seen the trigger yet. I guess what troubles me, Alex, is I see the value opportunity, but at the same time, I think Europe could use a lot weaker euro. I mean, the euro has been around for just over 20 years. It was launched in November '99. The Euro Stoxx 50 peaked 5 months later, and it's down, over the last 19 years, it's down 45%. Wow. So almost, I mean, the creation of the euro was sort of a contrary signal that here these warring nations, bitter enemies for centuries, came together finally in 1999, and ultimately it was sort of like a peak in the relative performance of European shares. So I do see the value, but if the euro were to slide, obviously, that would hurt the U.S. dollar-based returns of an investor based here. So it's a catch-22. But I expect we'll be increasing allocations later this year, nonetheless.